Good morning and welcome to Market Cafe on ET Now, your first pit stop for everything you need to know before the bell rings. With me, Ankur Mishra and Kanishka Sarkar, we'll bring you all the news from global cues to corporate action, policy signals, to stocks that should be on your radar. Let's get started with cues from US market first. Good morning, Kanishka. Mixed signal from Wall Street.
Absolutely, Ankur. First of all, a very good morning to you. Now, sort of mixed signals from the Wall Street. If you look at S&P 500, that rose modestly overnight, extending a strong start to the week that pushed the benchmark into the green for the year itself. Now, the broad market index inched up about 0.1% to close at 5,892, while the Nasdaq Composite gained 0.7%. In fact, it was also the sixth straight winning day for the tech-heavy index. Now, the Dow Jones Industrial Average, on the other hand, continued to stay in the red territory, falling about 90 points at close. My bad. Technology stocks, on the other hand, were the one that climbed. Shares of Nvidia advanced more than 4%. Tech giants are putting up a strong show for the week to date, as well. Nvidia and Tesla are both up about 16%, whereas Meta Platforms has added 11% during this period. Now, Amazon and Alphabet, on the other hand, both are up more than 8% each. Now, week to date, the S&P 500 and Dow are up more than 4% and nearly 2% respectively. The Nasdaq, on the other hand, has jumped more than 6%. Now, this week's gains also put the spotlight on S&P 500, which is now in the positive territory for the year. Now, at one point, the S&P 500 was more than 20% below its record high set in February. But since hitting that April 7th intraday low, the benchmark is now up more than 21%. Now, risk appetite grew this week after the US and China temporarily slashed tariffs on a wide array of goods. The US reduced duties on China to 30% earlier this week, while Beijing lowered its own levies to 10% on US imports. Now, both nations had threatened in April to impose those tariffs above the 100% mark. But other than that, what are you picking up on the crude front?
On the commodities front, crude oil price eased overnight, giving back some of the gains from earlier this week. Brent crude settled around $66 per barrel, while WTI closed near $62, both down roughly 1% from the previous session. The pullback came after US crude inventories unexpectedly rose 3.5 million barrels last week, signaling potential oversupply concerns. The market is also digesting OPEC's latest monthly report, which trimmed its forecast for non-OPEC supply growth in 2025 to 8 lakhs barrel per day, down from previous estimate of 9. This revision reflects reduced capital spending and slowdown in US shale output. Despite these factors, oil prices remain near 2-week highs. But we'll discuss OPEC in detail later. But gold prices also dropped. Rising trade optimism boosted risk appetite, leading investors to shift away from bullion. Spot gold slipped to its lowest since April 11, shedding over 2% to $3,188 an ounce. Bullion fell as low as $3,174 earlier in the session. Despite this downtrend, remember, gold has scaled to a record high of $3,500 last month, as prices are up 21.6% so far this year. And staying on with crude, as I told you earlier, OPEC has trimmed its forecast for growth in oil supply from US and other producers outside OPEC group this year, saying it foresees lower capital spending following drop in the prices of late.
All right, that's the forecast as far as OPEC plus supply is concerned. But moving on, let's also take a look at the cues to watch out for in trade today. Now, back home in India, trade data is something that we are going to be watching out for. That's going to be released later in the day. In the US, retail sales and industrial production data is something that will be released later in the day. In the UK, GDP and industrial production data as well is going to be out today. In the Eurozone, GDP as well as industrial production data is something that we are going to be watching watching out for. Now, in terms of global earnings, we have Walmart, Alibaba, Siemens, and Alliance reporting their results going forward in the day. In terms of corporate action back home, we have Godrej Industries, which is going to the board of which is going to mull a fundraising later in the day. Apart from that, it's also the last day to buy shares to be eligible for a dividend when it comes to Advanced Enzymes and SPI.
Right, let's get started with the coverage with some stock specific action also that happened on Wall Street. US tech conglomerate Cisco delivered upbeat guidance after report a beat in their third quarter results. Annual forecast lifted. The company is now looking to bet on steady demand from cloud customers for its networking equipment driven by artificial intelligence boom. The forecast, of course, is factoring in current tariffs and exemptions in place until the end of 90-day pause period, which ends on 9th of July.
All right, then a strong outlook as far as Cisco is concerned. But moving on, Foxconn has also reported a 91% surge in its Q1 earnings. Now, a substantial increase is attributed to the robust demand for AI servers. Now, Ansh is joining us with all the details on this front.
Foxconn, Taiwan's top contract electronics manufacturer, has reported a massive 91% surge in its quarter-one profit, and this was especially driven by demand from AI servers. That's what the company has said. Also, the net profit came in at around 42.1 Taiwan dollars. That's about 1.4 US dollars in billion terms, comfortably beating the LSEG estimate of around 37.8 Taiwan billion dollar, nearly doubling from its previous year's 22 billion dollars. With this, the chairman has actually given some cautious tone because he has said that the rest of year could be a bit of a cautious sentiment. He also flagged that US tariff as a rising challenge and revised the full year outlook from significant to just a strong growth in 2025.
Nvidia rival AMD or Advanced Micro Devices unveiled a $6 billion stock buyback, joining a string of chip makers that are looking to reduce their float. As the AI trade that has powered their shares shows some signs of slowing, the buyback, which boosts its low total repurchase authority to about $10 billion, comes just a day after company announced a deal with Humane, saying it has formed a $10 billion collaboration following in the footsteps of a number of US tech firms that struck AI deals in the West Asia. Shares of California-based company rose as much as 6.4% and have fallen over 6% so far this year.
All right, then moving on, Boeing and Qatar Airways have announced a deal for the West Asian airline to buy up to 210 jets, notching the US plane maker's largest ever order of a wide-body aircraft. Now, the deal is the biggest deal so far in the Qatar Airways history, includes 130 Boeing's 787 Dreamliners and 30 of its much-delayed 777-9s, with the options for up to 50 more planes.
Right, now shift focus on the domestic news as well. Make My Trip has reported a sharp drop in bookings to Azerbaijan and Turkey, with cancellations surging 250% over the past week. Amid the ongoing Azerbaijan and Turkey issue, there's a boycott call by some of the houses. It has also discontinued all promotions and offers on its platform to discourage tourism to this two destination. According to a statement, Samir is joining in with actually more details.
Strong sentiment expressed by the Indian citizens against Turkey and Azerbaijan has now resulted into a significant loss for these two countries. As per the data shared by Make My Trip, it mentions that the bookings for Turkey and Azerbaijan for last 1 week, it has dipped, it has gone down by around 60%. Not just this, the cancellation for these two destinations by the Indian citizens or by the Indian tourists, it has been increased. The surge is there by around 250%, and that is the reason. Seeking this strong sentiment, seeking this social media trend of boycotting of Turkey and Azerbaijan. Now, almost all the travel and tour operators, they have unified and they have expressed or they have sent sort of an advisory to the citizens or Indian people, those who are visiting Turkey and Azerbaijan, that they should travel at their own risk. For example, Make My Trip, Ease My Trip, and Ixigo, they have mentioned that these two countries, if you are visiting as a tourist or for any other purpose, then you are traveling at your own risk. And if the visit or the travel is not very much necessary, it is advised to alter or to change your plans. And this is there when it comes to the tour and travel part. From the data perspective, last year, roughly around 280,000 Indian tourists went to Turkey, and this tourism, this is a major contributor for Turkey, for the whole economy. And when this sort of trend actually continues, that gives a major dent to not just Turkey, but to Azerbaijan as well. And we have seen in the recent past, when it came to, for example, in the Maldives case, we have seen that how India gave a befitting reply by boycotting Maldives, and similar sort of trend we are witnessing for Turkey and Azerbaijan for their support, that these two countries have given support to the Pakistan, and post which we have seen that now Indian citizens are boycotting Turkey and Azerbaijan, and we can see that similar sort of a trend could be there for economic ties as well. When it comes to the educational ties, also we have seen that several suspension has taken place.
Thank you, Sameer, for getting us all those updates. But now let's keep it with this pace. Now, in a strong protest against Turkey's actions, JNU has also cancelled an agreement with Turkey's Inonu University, citing national security. Now, according to the JNU website, the agreement was signed on February 3rd for 3 years and was supposed to continue till February 2nd, 2028.
Indian Commerce Minister Piyush Goyal will visit to US this weekend to take part in trade talks. Sources say the next round of India-US trade talks will focus on ironing out market access, rules of origin and non-tariff barriers. Piyush Goyal's delegation will include senior officials. My colleague Sumit Chaturvedi has got more details.
Well, as India and US discuss to seal a bilateral trade deal by the fall of this year, Piyush Goyal, Commerce Minister of India, will visit US on the weekend. From 17th May, he will start his visit, which will go on till 20th of this month. Well, he's going to meet their USTR representative and also possibly Secretary of Commerce of United States. Well, US Vice President Vance was on India visit last month. There he met a number of officials and a number of talks also took place. India and US, they are looking forward to sealing this deal bilateral trade agreement this year only. If we talk about US and India, well, India is seeking concessions in many items like textiles, leather goods and other such electronic items. But on the other hand, US is seeking duty easiness in automobiles, electric vehicles, wines, cheese and some agricultural products. India, in fact, has gone to WTO and has also threatened that India has retaliatory tariffs also in its fold if it has to do that, but that will be on aluminium and steel. So keeping into account the 90-day tariff pause which is happening between India and US, taking place in India and US, this visit is quite important, especially when retaliatory tariffs have been announced by America on April 2nd this year.
With this, it's time to take a quick break, but don't go away. We'll come up with Market Check just after the break.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. It's time to get you a quick Asian market check. Well, Asia Pacific markets mostly fell this morning after actually mostly gaining in the previous session on easing US-China trade tensions. Now, today's downtrend comes despite the modest gains that we saw on Wall Street overnight. Now, if you look at numbers, Japan's Nikkei is down more than 1%. South Korea's Kospi, however, is trading more than 1% higher. Australia's benchmark S&P ASX 200, on the other hand, is trading flat with a tinge of red. Meanwhile, Hong Kong's Hang Seng Index, that's down about 0.5%, whereas China's Shanghai Index is down almost 0.2%. Now, just to put this downtrend into perspective, in a note, Citi analysts have said that while markets have largely priced in peak tariff-related macro stress, they remain wary of a second wave of volatility. Now, this time it could be driven by fiscal policy uncertainty and weakening US hard data, is what the analysts have said. On the other hand, if you look at markets back home, the market did close in the green yesterday, but not significantly higher. Now, the Nifty shut shop at around 24,666 level. Now, if you look at the implied Nifty at this point in time, it indicates an opening around this above the 24,700.
Start for our home markets.
All right, let's move on. And now the cabinet has approved 6 semiconductor unit under semiconductor mission. Now the 6th unit will be set up in Jewar, Uttar Pradesh, jointly by HCL and Foxconn. Now my colleague Prakash is joining us with all the details on that front.
The cabinet has decided to go ahead for setting up of new semiconductor manufacturing unit under India Semiconductor Mission. That's an important development coming in. HCL and Foxconn will jointly set up new manufacturing unit in the state of Uttar Pradesh near Jewar Airport. In meeting, the cabinet has decided to approve roughly around 3,700 crore investment proposal for this project, which will be set up in the state of Uttar Pradesh near Jewar Airport, and that's going to be 6 such projects under India Semiconductor Mission. 5 such projects have already been approved by the Indian cabinet, which are under construction, expected to be completed very soon. And in this meeting, the cabinet has given its green signal for setting up of 6 such projects under India Semiconductor Mission. If you look at the capacity of the 6 projects, that will be around 20,000 wafers manufacturing in a month and 36 million units of chips every month. That's an important feature of this unit. It's part of the government's overall objective to achieve self-reliance in semiconductor manufacturing, and therefore government is open to accept more such projects going forward.
Thanks, Prakash, for that update. But staying on this, listening to the Union IT Minister Ashwini Vaishnav on the new plant that will be collaborative project between HCL and Foxconn.
This joint venture will manufacture display driver chips. डिस्प्ले ड्राइवर की चिप्स इस प्लांट में बनेगी और ये देश की रिक्वायरमेंट भी बहुत बड़ी है क्योंकि देश में इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग जिस तेजी के साथ बढ़ी है अभी पिछले 10 वर्षों में 5 गुने से ज़्यादा इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग हुई है, उसके चलते डिस्प्ले की डिमांड भी बढ़ती जा रही है। ये प्लांट लगेगा, इसमें 20,000 वेफर पर मंथ की कैपेसिटी होगी और जो चिप्स इससे बन के निकलेगी उसकी कैपेसिटी है 36 मिलियन चिप्स पर मंथ, विच इज 3.5 करोड़ रुपीज 3.6 करोड़ चिप्स पर मंथ। ये रहेगा इसका 36 करोड़, आई एम सॉरी 3.6 करोड़ 36 मिलियन चिप्स पर मंथ का इसका रहेगा।
Well, that was the IT minister on the new facility that's going to come up in UP. But we also caught up with Ashok Chandak, who's the president at IESA and SEMA India, on how Foxconn and HCL joint venture will pan out going ahead. Let's go across and listen in.
I think we should not worry too much and read into why not Gujarat or other state, because particularly the OSAT projects, they could be done at multiple possible options, and there is a criteria which is always there in terms of what are the factors that would be taken into account while these plans are decided. And particularly, the 2 things important here. Number one, this particular joint venture are 2 great companies. HCL, very well-known name in India, and HCL Technology particularly has been operational and well-respected with their talent, skilling, and technology development, what they do. And Foxconn, the world's largest electronics company, not only doing the EMS activities, but also complete vertical integration of multiple things, actually. And second point is on OSAT. What do you need for OSAT to be successful? You need the input suppliers, which is a wafer supply. Now, wafer supply can come mostly from outside of India. So that means you need for logistic, the airports, which is already there, which is coming up near this plant, what we talked about. You need the packaging materials. Those are, some of them are wire bonds, bumps, and other stuff. You need the downstream applications that the industries, those are going to use these assembled components or packaged components. And that's where the, particularly the UP, Noida area and this belt is well known for its smartphone manufacturing. the electronic manufacturing services, EMS companies. What you need is also additionally the support from the state governments, which I think in this case, it looks like UP is equally interested to have manufacturing of the semiconductors related topics, considering they're already in the electronics. So I think overall, I would see no any major disadvantage. Particularly, there is one advantage surely that they have the downstream applications. Those are going to utilize these ICs nearby. So that helps over there.
Moving on, let's take a look at the mutual fund activity in the month of April. Ashesha joins to tell us what the mutual fund bought and sold this month.
Well, yes, so Nuvama Research has come out with a very interesting report of the stocks they bought, mutual fund industry bought and sold in the month of April. First up, let's talk about large caps, where mutual fund industry bought the most in Reliance Industries, Axis Bank, Kotak Mahindra Bank, and on the flip side, ITC, Bharti Airtel, Bharat Electronics were some of the other stocks where the mutual fund industry sold in the month of May. This, of course, is for the month of May. SBI and HDFC Life are also in the buy list, while HUL from the FMCG sector and Infosys from the IT sector were some of the other stocks where the mutual fund industry reduced their positions in the month of April. Shifting focus to the mid-cap industry or mid-cap sector then, a whole host of stocks over here as well. Lupin, Coforge, Colgate were added by the mutual funds in the month of April, while Voltas, Max Healthcare, Paytm were some of the stocks which they sold in the month of April. In fact, we'll have some more stocks, InfoEdge and M&M on the sell side, PI Industries and Persistent Systems from the IT sector on the buy side. Let's also shift focus to the broader markets and talk about the small cap index then. We had BSE, NBCC, Cyient, which were added by the mutual fund industry. Amber Enterprises, Nalcor, National Aluminium from the metal segment, Blue Star were some of the stocks where they sold out of. 361 and Galaxy Surfactants were also some of the other stocks. Ujjivan Small Finance Bank and Apar Industries are where they added their positions in. So across the sector, several stocks which have been added by and several stocks where they've reduced their position in the month of April.
Thank you, Ashesha, for getting us that snapshot. But shifting focus to an exclusive then, we understand from sources that on account of rising complaints on health insurers, companies have been asked to pump more funds into the Ombudsman Fund. Now let's go across to Anurag Shah to understand all these details.
So health insurers, Shahi companies will get more burden for the funds for insurance ombudsman system. As per our sources, till now the contribution for insurance ombudsman system was 50-50. 50% contribution used to be done by life insurance industry and 50% by general insurance industry. But with the rising number of complaints in a health insurance space, now CIO, that is a Council of Insurance Ombudsman, has decided to change the ratio of funding. So now life insurance industries, life insurance council will be contributing 31% and remaining 69% of the fund will be contributed by general insurance companies, and a major rise in fund will be for the health insurance companies, Shahi companies, standalone health insurance companies. So we have seen the data of FY24. So across the 17 ombudsmen across the country where the complaint received in a health insurance space, the complaints are around 31,000. In a life insurance space, the complaints are around 16,000. In a general insurance space, around 5,000. So in a health insurance, number of complaints are increasing. That is the reason that CIO has decided to change the formula of contribution, and this will burden the insurance companies, health insurance companies. Across the country, there are 17 insurance ombudsmen, and insurance ombudsmen are completely funded by the insurance industry, general insurance industry and life insurance industry. In FY24, the total funding was of around 73 crore, which was contributed by the industry only. And going ahead, this funding will increase, and overall share of health insurers will also increase due to increase in rising number of complaints related to health insurance space.
Thanks, Anurag, for that update. Indeed, health insurance companies will have to bear that burden. With this, it's time to take a quick break, but don't go away. We'll tell you after the break which stocks should be in your focus. Welcome back after the break. You're watching Market Cafe with me, Ankur Mishra and Kanishka Sarkar. Let's do an Asian market check, how they are faring. It is showing some sort of weakness. You can see Nikkei is down more than 1%. Similarly, Kospi is down 0.2% and Hang Seng is also down in 0.5%. Kospi, you just saw that it has now come into the green, but trading mostly flat now. Similarly, if you talk about Shanghai, it's also showing some sort of weakness in the opening trade, but Nifty implied open is still maintaining 24-point lead, which means that there might be positive start in the Indian market. Kanishka?
Well, absolutely. Let's see how that pans out. But now let's shift focus to the earnings space then. Now, Eicher Motors has reported a rather mixed set of numbers in the fourth quarter. Profit rose a little over 27% compared to last year to 1,360 crore rupees, handily beating street expectations. Meanwhile, the revenue managed to meet estimates. However, disappointment came in on the margin front. Now, the auto company saw margin shrink to 24% from 26.5% earlier. Now, my colleague Srishti is joining in us with all the details and the fine print of those numbers.
Well, it's been a mixed bag from Eicher Motors this time around. While when it comes to revenue, the number has come in line to what we were expecting at ET now, 5,241 crores. EBITDA marginally below, and especially the margins, 24% is what the company has clocked in. And there's a miss coming in from the Royal Enfield margins as well, because the standalone margin stands at 24.7%, that bit lower than what the street was penciling in. And even the consolidated margins as well, if we see, then that is also lower versus the street estimate. The profit has actually managed to surprise us a bit. 1,362 crores is what the company has clocked in, better than what we were expecting, and believe that because of the higher other income, that is one of the key contributors. Higher share from VECV also contributed in the numbers. Other than that, what's key to note is that the EBITDA per vehicle has now dipped to a 8-quarter low despite the live high quarterly volume. So especially the margins are taking a hit for Royal Enfield as well as Eicher Motors on consolidated basis, and hence we say that there has been a bit of a miss on the margin figure. But yes, indeed, the profit figure is above the our estimate as well. So we would call it a mixed bag coming in from Eicher Motors.
Let's also go across and listen in what management had to say post their mixed set of Q4 earnings. Let's listen in.
I think, EV, our thought is Royal Enfield's take on EV is through the Flying Flea, which is an endorsed brand. This is the brand which blends for city plus conditions, lightweight. That's the initial thought with which we will be entering. That's what is the platform which we are working on. As I mentioned, there are two products, which is C6 and a Scrambler take, which is S6. Both these products are very different products which are going to come in the Q4 of FY 23-26. It's only a starting. It can lend itself to the various form factors which we will keep looking at for the city plus. We are not at this stage envisaging to be a separate subsidiary or a separate business unit or something like that. It is part of the Royal Enfield, and there is a dedicated team of almost about 250 people who are working only on the electric, which is our Flying Flea to start as of now. So our Flying Flea, the endorsed brand of Royal Enfield, our focus will be making urban-focused city electric two-wheeler for the future, which is timeless yet modern technology and design, which is embedded into the motorcycle. That is what is our Flying Flea thought.
For us, it is, from a production perspective, it is business as usual, and we would expect to catch up on those lost dispatches in the coming weeks. In terms of demand, at this point in time, no major change in the demand environment there at this point in time. The new prices will be going in soon, and that is when we'll be in a position to read the demand situation better. Having said that, given it's in the premium luxury segment, I do expect the demand to be far more resilient compared to a more mass kind of manufacturing OEM. And therefore, I remain optimistic on the demand, even in the US. There's still a lot of details awaited in terms of whether those tariffs are now waived for parts and accessories. Is it available from a retrospective effect from April 3rd when the tariffs first came on board? How exactly is going to get implemented is unclear. So I think until we get further details on that, it's going to be very difficult. And these are all, every day is a cost that you would have. And therefore, it's important that we get a hang of what those dates are. And the numbers can move materially, so we would rather wait for that before we put it out. Second factor, I think, similarly, we need to see a tariff deal happening between EU as well as US. EU-US deal as well, because you've got our defenders and discoveries being made there in the Slovakia plant. So that's why I'm hopeful that will also come through. So I think there's a lot of moving parts as far as JLR is concerned. Domestically, I think things are much more stable compared to what we see in the international markets. Here, if you notice, commercial vehicles we have delivered despite a decline in revenues. We held our shares and at the same time improved our profitability. And that journey will continue. We would want to see us stepping up on the market shares as well, particularly in the small commercial vehicle business. But that's the only area where we should have done a better job than what we have done last year. So with that, I think the commercial vehicle business will be on a fine fettle as well. And on the passenger vehicle side, I think this is a year of consolidation and our market shares have stabilized. Our product offensive starts now with the launch of the Harrier EV. Then we have the Sierra coming in. The Altroz has just been relaunched. The Punch mid-cycle refresh is coming through. So a lot of product actions are coming through. And that should also help us get back to the share increase journey that we've been on to for the last 4 years. So it's quite a full plate that we have. So the actions are all happening. But to translate that into numbers, and this is what will be the numbers here, it's just that the externalities are simply too confusing for us at this point in time to be able to distill it out and hold ourselves accountable to that. But the fact that we'll focus on growth, the fact that we'll focus on investment, that doesn't change. And that means we'll need to be very tight on our cost, very tight on our cash. And that is something we'll do.
All right, then that was the Tata Motors management on the roadmap ahead for growth. But now moving on, as we are, penciling in a start above the 24,700 level for the Nifty, Gaurav is standing by to tell us about all the stocks that should be on your radar today. Good morning, Gaurav. What's on your list?
First, let's talk about IRDA, because the company has now filed a plea against Gensol, and this is filed under the insolvency code worth 510 crore rupees. Other than that, Vodafone is also going to be in focus because company has said that they will be launching 5G services in Delhi NCR, and they are going to expand these services in across 17 circles by August 2025. Wipro is also going to be in focus because company has announced a digital transformation partnership with Hatchet UK. With this, they will be helping the company to modernize their IT infrastructure. Other than that, Tata Power is also in focus today. First of all, a mixed set of numbers is what we saw from the company, and other than that, company has said that they will be bidding for the Discom privatization in Uttar Pradesh, and in FY26 they see that the capex will reach around 25,000 crore rupees. Now let's not forget that for FY25 the capex level is at around 16,000 crore rupees. Muthoot Finance is also in focus today. A good set of numbers is what we saw from the company, and other than that, board said that they will be opening around 115 branches in FY26. And when we talk about the commentary, what we have picked from the commentary is that the RBI said that the rising gold price is actually a red flag for the institutes, and other than that, what they're saying is that RBI is unsure if the new players are following norms. So definitely watching out on these comments as well. Other than that, let's also not forget about Aadhar Housing Finance, because the lock-in period ends today. Around 35% of the shares will end its lock-in period. And lastly, let's also focus on some of the counters on the back of the earnings. So we have Jubilant Foodworks, Piramal Pharma, who actually reported very good set of numbers. Other than that, when we talk about Tata Power, Torrent Power and Brigade, we saw a mixed set of numbers was penciled in Q4 FY25. And lastly, let's also not forget about Kirloskar Oil and Karnataka Bank, where we saw a weak set of number in this quarter. So definitely watching out on all these companies on the back of the news flow as well as numbers today.
Thanks, Gaurav, for that update. Now it's time for some interesting market opinion from the House of Kotak from none other than Nilesh Shah. His take on earnings and outlook going forward. Let's listen in what he had to say.
This quarter, we should be having Nifty 50 EPS of anywhere between 260 rupees to 275 rupees. That should take us somewhere around 1050 Nifty EPS for FY25. This year, FY26, we could be somewhere around 1150, 1160 Nifty 50 EPS. And year after that, we should be crossing somewhere around 1300. So the earning trajectory looks quite reasonably solid. Now, there are sectors which are doing well, there are sectors which are not doing well, but overall earnings trajectory looks on the positive side. Undoubtedly, we have areas to cover, for example, private sector investment, but consumption, which was little bit on the soft side, subdued side in the urban India, is likely to get supported. So overall, my feeling is that both from an earnings point of view as well as flow point of view, India is well supported. Our valuation to a great extent discount that growth, and hence the returns will be moderate.
ICICI Bank, HDFC Bank, BEL, these are some of the top holdings of Kotak. FIs are back, DIs are buying, HNIs are feeling left out. Retail is saying we should not cancel our SIPs. तो market में seller ही नहीं है अब तो.
So the selling will have to come, Nikunj bhai, from the IPOs and OFS and QIPs. There is a large lot of promoter lock-in which is getting expired or which will become free. So my feeling is that at a price, sellers will emerge. At a price, buyers will emerge. And that's how market functions. Undoubtedly, flow point of view, institutional and retail investors are likely to be buyers. And hence, supply will essentially come from the primary or secondary issuances from the promoter stable.
All right. Hi, Nilesh. Good morning. This is Shrishti also joining in. But what do you make of the FII comeback? Do you believe that now is the time then FIIs are making a strong comeback and they are here to stay? Because of late, while the markets were a little choppy and volatile, the FIIs did turn positive in the month gone by, and in this month itself, the majority of their action is on the buying side indeed.
So we saw in the month of March passive funds turning buyers. April was largely passive funds continuing to buy. There was one particular day when 11,000 crore worth of FPI buying came. That was primarily driven by passive flows. Active funds started buying in May, and despite this geopolitical risk, they continued to buy. So my feeling is that FPIs will be buyer of Indian equity. Of course, they are here to make money, so they will look at valuation, they will look at potential return trajectory. But my feeling is that ultimately, subah ka bhula, sham ko ghar laut aayega.
Nilesh bhai, you've been bullish on IT, you were bullish on cement and consumer. Has that view changed of late after numbers and what's happening in the world?
So undoubtedly, Nikunj bhai, on IT, our call hasn't worked yet. We were probably a little ahead of getting into IT sector. The commentary as well as the results are little bit in line with market expectation or below market expectation. We think there's no downside in IT sector right now because the dividend yield is between 2 to 3%. But undoubtedly, the upside is also missing right now as there's no clarity about the future. The confidence about future volume growth, future margin is not there. And hence, I don't see IT sector outperforming market in the near term. As an institutional investors, we have to catch a falling knife. Otherwise, we won't get the quantity. So I have to accumulate in this period of underperformance. On cement, clearly the March 25 quarter, thanks to government order and government spending on infrastructure, was quite a record quarter in terms of volume. We expect that focus to continue going forward. Consumer is one sector where we believe there is a reasonable highway. The 1 lakh crore tax rebate given, tax cuts given to taxpayers will be effective this year, and thereafter there is potential petrol diesel price cuts.
All right, that was Nilesh Shah on his outlook for the market going forward. But we also caught up with Feridun Farsharuki, who's the founder and chairman emeritus of FGE. He discussed with us the rationale and impact of OPEC plus output hike, the outlook for US oil production, and the impact of Trump's tariff policies. He also touched upon how he sees oil price trajectory to shape up going forward. Let's go across and listen in.
The fundamentals of the market today is quite tight. Inventories are very low. If you want to do something, the best timing is now, because the impact on the market is not so dramatic. You saw the prices drop by $3-4, and then they gained it back in 2-3 days, because at this point in time, the low inventories actually mean that the market is quite strong. So you have achieved several targets at a good timing with one move. But does it mean that the prices will keep going down? The answer is no.
Right. So how likely, Dr. Farsharuki, do you think it is that OPEC Plus will implement another triple unwind of cuts, similar to the 411 kb per day increase that we saw in May 2025, perhaps?
I think they will do more until they basically get to the end of the voluntary cutbacks. And of course, every time they do it, they watch the market. If there is a disastrous drop, of course, they would slow it down or stop it. But they think they can manage it. And this continues definitely until October, maybe even a bit later. But their basically target is to encourage new demand growth. Countries like India, the demand growth could be quite substantial as a result of the lower prices. In China, maybe not so much, because in China, the EVs have basically reduced gasoline and diesel demand. They've already peaked by end of 25, and while other parts of the barrel are growing, but there is a very small reaction to the lower prices. At the same time, lower prices would seriously damage the US production. So the market can come in balance slowly, but nobody looks at it as a long-term strategy. This is 6 months, 3 months, 6 months, maybe even a year. And after that, we still expect the prices to go back to $70 a barrel.
How significant, Dr. Farsharuki, do you expect the downward revisions to the 2025 US oil output forecast could be? Could it be sub 50 per barrel WTI in the current environment, you think?
No, I don't think so. You have to look at WTI and Brent having about a $3 a barrel, $3 to $4 a barrel differential. So US prices cannot go down on their own. They would have to be, they are linked to Brent. But the US production at mid-50s already will be challenged. So as soon as there are indications of US production falling, I think Trump would have an incentive to begin to change direction.
And Axiom 4 mission to be ISS piloted by Indian astronaut Group Captain Shubhanshu Shukla with 3 other crew members has been delayed and will now be launched in Florida on June 8. It was earlier scheduled to be launched on May 29. Moving on, after visiting Saudi Arabia, Donald Trump landed in Doha, where he was greeted by Emir Sheikh Tamim Al Thani as he kicked off the second leg of 3-nation Middle East tour. Trump was driven through an elaborate welcome parade featuring men on horseback and camelback, with traditional dancers flanking his convoy as he arrived at the Doha Royal Palace. At least 10 terrorists were gunned down in a fierce firefight with security personnel in Manipur on Wednesday. The operation by an Assam Rifle unit of Spare Corps will be underway in the Indo-Myanmar border, and this is still ongoing.
Moving on, schools in border areas of Jammu and Kashmir are set to reopen today. The areas include Jammu, Samba, Kathua, Rajouri and Poonch districts. And the reopening of school marks a key step towards restoring normalcy and ensuring that the education of students in border areas continues without further disruption. Next up, Kolkata's Victoria Memorial has been illuminated in the colours of the national flag, paying homage to the enduring pride, unity and glory of our nation. Now, this marks India's fight against terror and an expression of unity with the Indian Armed Forces. Next up, a new low-cost counter-drone system in hard-kill mode. Bhargas Vastra has been designed and developed by Solar Defence and Aerospace Limited, marking a significant advancement in countering the growing threat of drone swarms. Now, a total of 6 trials were conducted and the rockets performed as expected. Next up, Mumbai's Metro 9, which connects Dahisar to Mira Bhayandar, is on track for a phased launch, with the first phase likely to be inaugurated by the end of this year. Maharashtra CM Devendra Fadnavis, along with Deputy CMs Ajit Pawar and Eknath Shinde, flagged off the trial runs of the first phase. Now, they also conducted a technical inspection of the route, signalling key progress in the project.
With this, it's time for a wrap in this edition of Market Cafe. We are leaving with the implied open of just 11 points now, but how to navigate further? Watch the market next.
If you like this video, then like, share and subscribe to ET Now.